Hello everyone, and welcome to today's video. So in today's video, I want to address, are we compelled to buy stocks at the bottom? How often do we actually buy stocks at the bottom? And perhaps why it's so hard to buy stocks at the bottom, yet very important to have conviction enough for anyone to buy stocks at the bottom. And so most investors have a very hard time buying stocks when they are at their lows. And it takes a lot of time and experience to be able to do that. And why is that? Well, it's because to buy a stock when it's at its low, like the lowest low, there's going to be a lot of terrible news. That's oftentimes when the stock prices are the cheapest. Be fearful when others are greedy, and buy when others are fearful. The classic Warren Buffett quote. But it's very hard to do because you're going to have to buy stocks when everybody you know, every smart investor, every smart people you know are not buying stocks. And I remember one time I really did okay doing that strategy was back in March 2020. I think we all remember March 2020 as investors. And this was that Friday. I remember that Friday like it was yesterday. March 18, and all stocks, down minus 7 to minus 10%. And you had Bill Ackman, famed investor, coming on CNBC, and he was like, hell is coming. He's very famous for that. Hell is coming. And the news was so negative all day long, be it stock market news, world news, everything was so negative. And this is some of the things that were on Twitter, that he was saying on air. Every hotel is going to shut down in the country. If we allow this to continue, every hotel company in the world is gone. Everything's gonna be gone. Everything's gonna die essentially. Hell is coming. That was what Ackman was saying, and to me that was peak fear. And I remember at that time stocks like Hilton, Marriott had plunged 50 to 60%. But remember that was in 10 days. In about 10 trading days. These stocks lost so much value, and I remember distinctly putting a few $1,000 on March 18, and it didn't feel good, but it was a very good decision afterwards. But I went out of the usual stocks that I buy, and I bought a few hotel stocks, and I bought a few nursing home REITs. Nursing homes got hit so unbelievably hard because people thought that the elderly, the customers were going to mostly pass, and so people thought that the liabilities for business. So anyways, the stock market panicked, everything went down, and of course hindsight is 2020. Now we know that would have been a wonderful time to buy. When it is peak fear, it is a wonderful time to buy. But I think it's a muscle. It's a muscle that you have to walk on because you're not born that way. And so, are you ever compelled to buy at the bottom? Well, it's hard because it goes against nature. It goes against every fact that you see when you buy at the bottom. It's easy to say. It's actually much harder to do. And like I said, imagine buying nursing home stocks in 2020 in March when the news is everybody's going to die. That was the news, right? It's not easy to do. I'm very happy that I did that. Regrettably, I did that with too small of a position. That was the best thing to do, to have enough conviction to actually go in order, right, on that position. But I did it with too small of a position. And as a result of that, most people end up buying when we're comfortable. We end up buying when sentiment is good. And I would argue that that's okay. That's okay. Over the long run, buying stocks at the top is okay as long as you have the conviction not to sell when stocks panic, right? That's the other side of that story. There's two sides to that story. Is one, do you actually buy when it's at the bottom? Well, that's good that's very good if you do that. And do you actually not sell when it's at the bottom, right? So you're kind of doing 2 for 2. Like if you don't sell, and not only do you not sell when everything's at the bottom, when everybody's telling you that everything's going down, you don't sell, but you buy more Well, I would argue that's a sign that you're doing really well as an investor, that you have mastered your emotions. If you don't buy more and if you sell, that's the worst thing you can do. And you may remember 2008. So many people in 2008 flipped their 401ks, their entire 401ks, 500,000, 1,000,000, 2 million. They flipped it to treasuries at like the worst time. And so they missed all of the return of the market out of fear. So you can't let fear control your emotions. I would argue that more often than not, the market overshoots, and it overshoots either way. But in the case of this video and the question, are we compelled to buy at the bottom? We're interested in the stock overshooting to the downside. Most times, the stocks overshoot to the downside, and they eventually revert back to the long-term trend, right? The long-term slope of the stock tends to be the long-term return. When you pick fundamentally sound companies, your companies have to be sound. But if you pick a sound company that's not going bankrupt, that has top-line revenue growth, the trend tends to be up, right? If it's an innovative company, the trends tend to be up. And I tried to draw kind of my thinking here with a few stocks, and I realized for many of my viewers, this will be a well-known thing, but I'm trying to do a few evergreen videos here for the channel that I can refer back in the future. So this is an example of Alibaba. Like, Alibaba, I mean, it's the leader in China, right? They're doing pretty well in Eastern Europe. They're exporting. They are the leader, the leading platform where wholesalers contact each other, and they have Taobao. And I mean, anyways, it's a successful company within its setting and within its context. And you can see, you may remember, what is it, six to 9 months back, you started seeing more extreme headlines. Oh, I would never ever invest in China. Oh, China is uninvestable. Oh, China is going to get delisted. Oh, the CEO is going to go to jail for I don't know how many years. A very, very bold statement, very sweeping statements were made relentlessly by just about everyone in the media. There was a full consensus that China stocks were not to be touched. And of course, what do we see now compared to those few months ago, right? Is that, it's up 74% from the bottom. And I would argue, because there's been a lot of fear spread on Alibaba for more than a year now, year and a half, 2 years, I would argue that the stock is going to retrace, right? Is going to retrace back to the long-term trend. And it may overshoot again. So when you look at that trend, you may say, okay, well, 2017, 2018, maybe a little too optimistic. Same in 2020, maybe it got a little too optimistic. But overall, the trend is a long-term trend, but then the stock overshoots to the downside and to the upside. And the key is right here, the news is going to be very, very negative. Right here, the news is going to be very, very, very positive. And I would argue it's a good idea to buy all the time if you like a company, to average in your position. But most people are more likely to buy here. And so if you're more likely to buy here, the question is, do you sell when you're here? And you should not, right? You should, not investment advice, but you know what I mean? It's a bad idea. There's more stocks like that. Meta famously was one. So this is the long-term chart of Meta. And I drew kind of a long-term direction. Meta kind of, a big tech company with an outstanding business model, high growth, but not quite as high growth as all of other big tech. It's kind of the ugly child of a big tech company, Meta. But I posted this video about 2 months and a half ago. It was one of the first videos on my channel, and I was like, "This is crazy. Market is crazy. I'm trying so hard not to buy." Meta was so cheap. It was trading at a PE of 9, and it actually got down to a PE of 7. Believe it or not, at the very, very bottom. That was absolutely crazy for a company with such high gross margins, and that was doing so well. The news was way too negative on Meta. It overshot to the downside. I would argue, and of course now the stock is almost up 50% at the time of recording of this video. So it is retracing, and I would argue that it will retrace, and it will overshoot and undershoot and overshoot and undershoot, as it is the nature of the news cycle and what these stocks do. Last example, Stock that I bought, I remember distinctly. I bought it intraday at $14 a share. I put a few $1,000s in this stock. So again, you begin when you buy a stock, right? You try to buy the best player in the field. I wanted to buy nursing homes when everybody was telling me that nursing homes were a terrible investment, and so I bought nursing homes. I think it was shortly after that Bill Ackman video. Intraday, I got it at $14 a share. I will always remember. And I chose Ventas, VTR. Why did I choose Ventas? Because when you did a little research, you realize that the best healthcare REIT out there is arguably Ventas. Yeah, the stock overshot, right? So it overshot down. You have the news. Oh, a sweeping statement like, everybody's gonna die. That's a sweeping. That is not an accurate statement. That is too bold of a statement to make. Bill Ackman made that statement on CNBC live. Hell is coming, repeating multiple times. And you buy, and then you can do, 3x your money. It's a trade. It's not the type of investing I like to do. I'm a long-term investor, but sometimes I think it's interesting to have a little side of your portfolio that's a little more speculative. And this definitely was a little more speculative. But nonetheless, stocks retrace. And of course, over the long term, Ventas doesn't do much. They pay a 4% dividend, but it's not a very good stock, right? It doesn't grow much. It's a stable stock. It's a retiree stock. You put it to as a placeholder for your money, essentially. That's not the growth stocks that I'm interested in this channel. But nonetheless, it retraces and it trades around a number, and you can see the stock yet has to retrace still. But now we have another issue, which is macro. But macro will abate too. Like the macro fears will abate too, and eventually stocks will return back to what they've always been, and they'll return back to their long-term trends. The value creation, the money creation will return back. So, in other words, and this is not from me, but this is another way to look at it. Stocks, what they do whenever there's bad news, they take the elevator down. They fall really, really hard. Where people say you have to catch a falling, well, you should not catch a falling knife, but they're like a falling knife. They take the elevator down, right, as we've seen in all of these charts, right? I mean, if it's not elevator down, I don't know what is, and if you look at that chart. And then they take the stairs back up. That's typically how it goes. So way down, elevator down, and then take the stairs back up, and goes back to the long-term trend. And so those moves down can be very, very swift as the news cycle thrives on bad news. I mean, go on Twitter. The bad news is always on top on Twitter. It always gets retweeted. It's always the bad news. Even on YouTube. I mean, it's very sad, but even on YouTube, it's like if you do a fearful title, people are going to click. Everything's driven by fear. If it bleeds, it leads. And you can probably link some of that fear news, some of those peak fear with stock price movement. But stocks eventually revert back to their average trend, their average value creation trend, provided that, a few things that I'll say here is, provided that after a swift decline, you still need to check the fundamentals and make sure that the stock does not have a swift decline because, I don't know, there's a huge lawsuit or they lost like their number one customer or something like that, then that's different. But you need to make sure that the fundamentals of a company are the same, and that really the decline is due to the news cycle. So make sure that the fundamentals have not changed for the company. And when the stock is down, keep dollar cost averaging if your position is not built. You also want to put a cap in how large you'll go in a position before you start a position. But keep dollar cost averaging if a position is not built. That's the idea that I set out earlier, which is, are you compelled to buy when it's at the bottom? Are you compelled to do that, right? And if your position is built, then do nothing. Then do nothing and keep a position and don't sell. Sometimes it's just as hard to do nothing as it is to make a move. Sometimes it's just as hard to realize that you have to do nothing. That's another Warren Buffett wise statements. You get a punch hole card and you have 20 investments in your life, and you gotta make sure that you do nothing most of the time. And I would argue, and this is a last piece of advice for this evergreen video. Like I said, I don't expect to have a lot of views in this video for when I post it, but over the long run, I hope I get a few views on it. In extreme situations, I would argue, take a break, turn off your app, turn off the trading app. Don't log in for 2 weeks. Like, it's not investment advice, of course, not lifestyle advice, no advice of any kind. But sometimes it's just too hard to look at the numbers. Don't forget that the red, right, the money lost hurts 2 to 3 times as much as the money gained. So sometimes it's a good idea to just turn off the app and take a break and not look at it, if that is what prevents you from selling. Because at the end of the day, you're buying an asset that has a rate of return, an internal rate of return, and your funds are going to compound pretty close to the rate of return of a business. So buy good businesses, and that's why I mostly focus on fundamental growth stock analysis on this channel. So anyways, thank you so much for watching. This is just entertainment, obviously, no investment advice. Don't forget to like and subscribe if you can. I really appreciate it. And follow me on Twitter as well. Thank you so much for watching, and have a great day. Thank you.